What if I told you that governments no longer rule the world? Money does. That behind every law, every election, every promise of economic growth, there's a quiet power structure that doesn't need armies, doesn't need votes, and doesn't need to show its face. It's not a king, it's not a president, it's a system designed to govern the governors. This is the story of how banking, once a service to nations, became their master, and how, without firing a single shot, it turned into the ultimate form of government. Long before central banks and digital currencies, power was measured in gold, land, and armies. But wars are expensive, empires need financing, and rulers, no matter how powerful, often ran out of treasure. That's when a new class of power brokers emerged, the bankers. In Renaissance Italy, families like the Medici discovered something world-changing. You didn't need to own gold to control it. By issuing paper credit backed by reputation and accounting, they became the invisible hand behind politics, the quiet financiers of popes and kings. Every royal victory, every treaty, every war, now had a price tag attached to it, and whoever controlled the credit controlled the crown. By the 1600s, this system evolved into something even more powerful, the central bank. In 1694, during a war with France, England was drowning in debt. The government turned to private financiers who offered a solution. They would fund the war, in exchange for something extraordinary, the right to issue money as debt to the crown itself. Thus, the Bank of England was born. This wasn't just a financial institution. It was the blueprint for a new kind of power, where governments no longer created money. They borrowed it. The model spread. France, the Netherlands, and later the United States adopted versions of the same structure. Each time, the illusion was the same. The government managed the bank, but in reality, it was the other way around. Money became credit. Credit became power. And power, quietly, shifted from elected leaders to unelected financiers. For centuries, gold anchored trust. But in 1971, that anchor was cut. When U.S. President Richard Nixon ended the gold standard, the dollar, and by extension every major currency, became backed by nothing but belief. It was supposed to be temporary. It never ended. Now, central banks could create money out of thin air, with no natural limit, and governments could borrow endlessly, promising future taxpayers would pay the bill. Debt became the world's most traded commodity. Think about that. Our global economy runs on IOUs. The more debt created, the richer the system appears, at least on paper. But every new dollar, euro, or yen means someone, somewhere, owes more tomorrow than they did today. This isn't an economy. It's a controlled feedback loop, and the central banks sit at the center of it. Fast forward to today. The world's largest central banks, the Federal Reserve, the European Central Bank, the Bank of Japan, the People's Bank of China, collectively control over $30 trillion in assets. That's more than the GDP of every nation on Earth except one. Yet no one elects these people. They don't campaign. They don't debate. Their decisions can raise or crush markets, spark recessions, or create booms. And they answer to no one but themselves. When they raise interest rates, entire economies slow down. When they print money, wealth inequality explodes. And when markets crash, as they did in 2008, who gets rescued? Not the workers, not the small businesses, but the same institutions that caused the collapse. The government doesn't bail them out. It borrows to bail them out. And who collects the interest on that debt? The system that caused it in the first place. It's a perfect paradox. The state looks like it's in control, but it's actually managed by the very financial mechanisms it depends on. Every economic crisis since the 1970s, inflation, debt ceilings, housing bubbles, has been met with the same solution. Print more money, borrow more, lower rates, and stimulate demand. But this medicine is poison in disguise. The more money created, the less each unit is worth. The more debt issued, the more future income is pledged to the past. And so the cycle continues. Faster, bigger, more fragile. In 2020, global debt crossed $300 trillion. That's 3 times the entire world's annual output. Yet we keep calling this growth. It's not growth, it's monetary colonization. A silent system that extracts value from the future to pay for the illusions of the present. Now, a new phase is emerging, one that could complete the cycle. Central bank digital currencies, CBDCs. Digital money, directly controlled, tracked, and programmable by the state and its financial arms. They promise convenience. But what happens when money can be turned off with a keystroke? When every transaction is monitored, every saving accounted for, and every policy instantly enforced through your digital wallet, who really governs then? Not your parliament, not your president, but the algorithmic extension of a banking system that's been evolving for centuries toward total control. We used to trade gold, then paper, then data. Now, we're trading privacy for participation. Takeaway 1. Power follows the money, and money follows debt. Once governments borrowed from bankers, sovereignty became an illusion. Takeaway 2. Every solution to financial crises has deepened dependence on the same institutions that caused them. Takeaway 3. The future of banking isn't about profit, it's about control. Digital money is the final link in a centuries-long chain of financial governance. So when you hear about economic recovery or monetary policy, remember, you're not hearing from a government that leads. You're hearing from a government that obeys. Because in this era, banking isn't just part of the system. It is the system. And as citizens, investors, and thinkers, our greatest power lies not in resisting the system outright, but in understanding it deeply enough to see through its illusions. If this opened your eyes, share it, because awareness is the one currency they can't control.